Hey guys, welcome to this week's Swyftx Squawk with me, Pab, lead market analyst here at Swyftx. And we've got another headline news-driven week. Some pretty interesting developments overnight between Elon Musk and Donald Trump that we'll dive into very shortly. But firstly, let's start with Bitcoin. We have seen its highest monthly close in history. We've closed off May very, very strong. But unfortunately, we've not continued to see that positive momentum flow into the start of June, with Bitcoin down 3%, tumbling close to 100K US dollars. Out of the US, a feud has fueled out of the Trump and Musk camps, specifically starting about a week ago when Elon had vocalized his disagreement with the big, beautiful tax and spending bill that had passed through the Senate, basically something that Donald Trump had been very proactive in terms of getting passed through the Senate, but has added some woes and wobbles to sentiment. 2025 has been nothing but a year where we have seen headlines really shake up and stir the market in terms of its sentiment, in terms of its confidence. Ripple waves like this are not really adding to improving the market's confidence in the current administration and just a general outlook on how we get to a timeline that is less chaotic, less noise. It's really, really hard to see how that could be the case when we are in such a headline-driven narrative at the moment. But that is to say, we did see some pretty interesting fundamentals towards the end of the last month, potentially lifting Bitcoin's price. We did see institutional adoption start to increase and improve, government legislation getting closer and closer with the Stablecoin Act, Genius Act getting closer to being approved, and ETF flows even showing a massive turnaround as well. So while there were obviously quite a few fundamental wins blowing in favor of Bitcoin last month, we have seen headlines take charge to start off June. And, this isn't something that's being felt just in the crypto camp. We are seeing stock indices like the NASDAQ and the S&P 500 slumping in overnight sessions as this bit of feud had broken out. But again, it's just another hallmark with 2025. This has been a seriously hard year for investors and traders alike. While we are seeing the social media jousting match take place, we can turn to some more solid data-driven fundamentals to understand what could be the potential impacts of what we're seeing right now and in the medium term. And that's where we can turn to on-chain data. It's a measure of what we're seeing actually happening on the underlying transactions on the blockchain. So, there's no mean girls behavior here. When we do look at short-term holders, which is defined as people that have transacted on the Bitcoin network in the last 155 days, we can get some pretty interesting insights. Particularly, we can see here that we have been close to one standard deviation away from price at that 114K mark where we did see new all-time highs. And maybe we're seeing a potential move back to the cost basis for these short-term holders. So fundamentally, what we're talking about here is people that are defined as a short-term holder, maybe those type of people in the market that have just entered. We have just seen all-time highs most recently. So potentially there could be some people who have bought at relatively high prices and maybe more likely to sell at either a small loss to try and avoid larger losses with everything that we're seeing play out in the market right now. So that could suggest that we see a move down towards this blue line here, where the current cost basis is sub 100K. We can see there it's $97,000. So that's a potential scenario to watch out for. The one thing I would say is with short-term holders, historically, you can see moves into this blue line have been quite volatile. And that does sort of then, bode to that idea that short-term holders are more likely to sell with a bit more conviction just because they have entered potentially a little bit late. But this is obviously very, very interesting too, to see this activity as we head into some macro news headlines as well, which could also throw volatility as well. So some people may want to get ahead of and potentially de-risk, which could also add to that selling pressure. But we do have the FOMC in 12 days. So the Federal Open Markets Committee there. And this will be a very interesting one as well in the US because we are seeing towards the end of this week some key jobs and employment data coming out. And that will definitely set the tone for where monetary policy may take us moving forward, particularly as we did see key inflation metrics last month end up cooler than expected. It's a very interesting moment right now that the Fed is walking a bit of a tightrope. So I wouldn't be surprised if this week and next week, there is just a lot more the market wants to see before we see any conviction really in a material way. But that's it from me here at Swyftx. Catch you again next week.